Trying to understand the eminence of real-world assets and the DeFi world? Then you are welcome to Link to the Chain, a podcast brought to you by Vsauce. It is designed to help you understand the happenings of decentralized finance along with real-world assets. I am your host, Nikki from Vsauce. I will be inviting experts from the Web3 industry to share with you their experiences and ideologies on RWAs and the DeFi world.
I'm pleased to be joined today by Barbara Ayayi, CEO and Managing Partner at Unicorn Growth Capital. First of all, Barbara, congratulations on the recognition this week in FinTech. Can you tell us a little bit about yourself, how and why you started Unicorn Growth Capital?
Sure. Thank you for having me, everyone. I started Unicorn Growth Capital because I've basically been extremely focused on financial services and it being a very key driver to creating wealth and creating inclusive economies. And Unicorn Growth Capital is really just a way for me to double down on my thesis around financial technologies, financial infrastructure being the key driver of the digital economy. So I started my career studying electrical engineering, computer science, and then I went into finance. I went into investment banking, working on Wall Street at UBS, JP Morgan. And I sort of had this finance career, but I decided to move to Africa and be part of setting up a private equity sort of financial services investments platform. And that opportunity allowed me to invest into financial institutions. And through that, I got very passionate about financial services and worked with a lot of the fintech founders and was part of setting up a digital bank. And that got me really excited about technology and how it was disrupting the financial services space. So I decided to go into venture capital. And when I went into venture capital, I focused on fintech. And one of my first companies that I invested in was a blockchain payments company in Nigeria. It's one of it's basically the first regulated blockchain payment switch that most of the major banks are integrated into. And that blockchain payment company was really solving an underlying problem around payments and settlements and reconciliation that the payment ecosystem had to deal with. And that's when I saw the power of the blockchain technology. And from then, I really decided to spend most of my career in venture capital and in building fintech and blockchain companies. I was part of setting up a digital identity company. And then a year and a half ago, I launched Unicorn Growth Capital to invest in the future of finance. And what we essentially do is we go after companies really building first mover, category defining financial infrastructure, in areas where you can really digitize processes that most people don't care to, challenging problems, cash driven sectors. But these are opportunities where once you digitize these sectors, you can open them up to build financial services on top and create more inclusive economies through opening up all these sectors through financial infrastructure. So that's the goal. We invest in pre-seed and seed companies, and we're really passionate about three things with the future of finance. And I'm happy to get into it. But the three things are open finance, embedded finance, and decentralized finance. And I can go into some of these things later on if you want.
For sure. I appreciate the, deep dive intro. And what I really enjoyed already is that you said you guys focus on inclusivity in the economy. And I think more and more people around the world definitely need access to this crazy, wild, awesome technology. And it's cool to see that you're being a part of that. Being a passionate person in this like male driven world, I also really respect you as a female, especially someone of color. And I think that we need more representation, especially in the tech world, but also in finance. And I just want to, kind of give you some kudos there.
Thank you very much.
You're welcome. And another thing you did mention, though, with this previous question is you said that you set up the first like blockchain payment switch in Nigeria,
No,
correct?
I invested. That was my first
Oh,
investment.
you invested in,
Yeah.
okay. Are there any other countries that you guys want to expand in?
You mean the fund or the investment I made?
I guess like in terms of both, any
Yeah.
other like countries that you would like to invest in, like you said, seed and
Yeah.
pre-seed, or oh yeah, I would love to hear what other countries you guys are looking to expand into.
Yeah, we as a fund, we're making investments in early stage companies, seed and pre-seed. Our founders can be located anywhere, frankly. But we're more focused on the infrastructure being built by these companies and making sure that the these companies are capitalizing on these huge growth opportunities in these markets, in underserved markets across Africa and to some extent in developed worlds like in the US. We think this infrastructure can be scaled into many emerging markets and other underserved markets within the developed markets. We see that as the big growth opportunity when it comes to VC is really serving building a financial infrastructure in these economies. And for us, and getting financial infrastructure drives inclusive economies because fundamentally the opportunity is bringing more people into the financial ecosystem. There's just still a huge credit gap, 5 trillion across emerging markets. You still have, a huge amount of people that are unbanked across the world. And, there's a lot of people in general are just underserved when it comes to financial services. We've seen that even in the US. We're getting into a recession. There's still a lot of opportunities to just make it easier for people to get access to financial services. And across both consumers and businesses, there's just a lot of opportunities to build infrastructure that makes it easier for businesses and consumers to transact, to get credit, get insurance, to get financial services in general. So we look at companies that can scale into these fast growing markets across Africa, across the U.S. to some extent, and across emerging markets like Latin America. We want our companies to be scalable into all these places because they're creating infrastructure that can unlock opportunities, and we see these opportunities in these underserved markets. So um, East Africa, West Africa, Southern Africa, Northern Africa. There are a lot of there are bigger countries within these places that have huge fintech markets, but we like to see companies that can scale into some of these major regions and can also scale into emerging markets. Well, U.S.-based companies, UK-based companies we invest in, but they have to have an angle that can allow them to scale into emerging markets, and we help them do that. I think for us, it's important to be a VC firm that has the ability to attract founders globally, but brings a level of expertise to these founders, and that's what we are. We bring the expertise we bring is we're domain experts when it comes to the future of finance, which we believe are in the areas that we discussed around open finance, embedded finance, decentralized finance. And two, we can bring these founders into markets, into emerging markets, into Africa, where they can really unlock opportunities and they can scale because these are the largest underserved markets in the world. And three, we can bring our ecosystem to these founders in these markets. We can help them connect with the big corporates, the big banks, the protocols, the VCs, the regulators, all the different parts of the ecosystem that can help scale some of these companies. And we bring capital. At the end of the day, one of the key things that we're spending a lot of time on is bringing in debt capital as well, to some of our founders. So those are some of the opportunities that we see in these markets and where we believe that these technologies can unlock inclusive economies.
1000%. And I mean, it might be an obvious question, but why did you choose Web3 or blockchain technology as your ideal field to kind of move into from TradFi?
Yeah, I mean, I think it's just a natural evolution. I'm just going to be very clear that I think anyone who's investing in venture capital And investing in the future of finance and not investing in decentralized finance is not investing in the future, which makes no sense. The whole point of venture capital is to invest in the future. And so it's a natural progression for me. The future of finance is going to leverage decentralized infrastructure, and we're seeing that across the board, right? It's become the norm to use stable coins to power cross-border payments, to power settlements. It's become the norm to use blockchain infrastructure to make sure that people get access to foreign exchange in a way that reduces FX risk for them, and in a way that's accessible. Because in a lot of these countries, accessing foreign exchange, or more importantly, getting exposure to foreign exchange is punitive, because a lot of these countries are seeing a huge volatility and devaluation. And so getting access to these stable coins become really important for a lot of businesses and consumers to be able to transact across the world. So bringing these companies and platforms into the global world requires you to be using blockchain and technology, which stablecoins are a part of. There's a huge opportunity in the TradFi world right now around putting real world assets on chain, whether it's tokenizing treasuries, bringing in bank deposits, bringing in private credit, opportunities around, financial services, real estate, funds, just bringing in, illiquid assets into the blockchain, and then making them much more easy to transact, making them tradable, making them more efficient and cheaper is becoming almost becoming the norm in the TradFi world. And everyone is seeing that as a huge opportunity and the next big disruption. It's a $16 trillion opportunity, tokenizing assets. And for us, if we're going to invest in the future of finance, we need to be investing in Web3. Web3 is a loaded term, but fundamentally, Web3 encompasses everything around decentralized infrastructure, including blockchain, including decentralized identity, decentralized storage, everything. And so we look at Web3 broadly, but with the lens around the future of finance.
Yeah, I agree as well. I feel like there was a saying when like Web3, blockchain, crypto, DeFi, all the terms were kind of up and coming in the last 5 years or so. Isn't it? Does the saying kind of go something like buy the rumor, sell the news? Right.
Right.
So people who are like, oh, Web3, blockchain, NFTs, crypto, all that stuff's dead. Obviously, you disagree with that statement, correct? It just means that they're not as educated, I believe, in the power that this technology can actually harness for the future for already existing systems, so to speak. So I'm glad that you guys are forward thinking, being progressive. Like you said, the natural evolution in finance. If you're not on this train, then you're kind of missing out, I think. So I'm glad we're all on this train right now.
Yeah,
um,
definitely.
yes. And another question I had for you was, can you quickly kind of just break down some key factors that Unicorn Growth Capital considers when evaluating a long-term viability of a Web3 project or protocol?
Yeah, no, it's a great question. So I think to your even just to answer this question, I think to your point earlier on about, you know, the conversation about Web3 is dead, or the hype is gone and all of that. I think all of that, slow down and sort of change in tone, you know, to some extent it is a good thing, right? Because I think what was happening is Web3 was becoming more about, just making quick rich schemes, and sort of very sort of unsustainable business practices. And that was what people were seeing was Web3 or DeFi. And I think that the conversation now is more, how do you build sustainable protocols, sustainable businesses, leveraging Web3 infrastructure? And that's fundamentally what we look at. And we've always looked at it before the hype, during the hype, and now after the hype, right? Is really just sustainability, our core thesis. And to be honest, our core criteria hasn't changed, whether it's TradFi or DeFi, whether it's Web2 or Web3. These are fundamentally companies or protocols that just have to be sustainable. And someone the other day told me, and I sort of think about this all the time, is that, we really should not be reinventing financial engineering. We should be focused more on software engineering, just building good companies that can be building good platforms that can be interoperable across the ecosystem. But when we start thinking about changing finance from the perspective of, re-engineering financial systems, and the way financial markets work, I think that's when we get into problems, right? And I think that's how we look at things. We just stay very focused on the fundamentals. Finance hasn't really changed. The concept of borrowing money, the concept of insurance, the concept of, keeping your money in a place where it can sort of yield returns, these concepts haven't changed, and I don't think we need to change them. What I think we need to do is build software that can allow you to, can allow multiple people to access these concepts, and be involved in these concepts and do it in a sustainable way. So we really look at companies, starting from the infrastructure. Like, what are you building? How is this sort of changing the way we can access financial services, right? We love, companies that are doing that, whether it's underlying infrastructure around payments. How do we bring assets on chain, and how does that now create a new business model around these assets? We're seeing people aggregating, all these companies that are protocols that are tokenizing assets, and now thinking about creating an exchange to sort of swap tokenized assets amongst each other, to make these assets more liquid, to make them more affordable and more efficient, right? How do we use software to start making things much more efficient, much more tradable? These are things that we like to see. The infrastructure, and infrastructure that no one else is doing, but because there's this opportunity to aggregate, to build interoperable protocols, to create liquidity pools, to bring assets on chain, to leverage data off chain with TradFi systems. How do you do all these things and create a sustainable company? These are things that we look at. And then obviously the founding team, we really want founders that, for a while we kept seeing companies just slap blockchain on their presentations, but they don't really have any real understanding of the technology and things like that. We want to see companies that have founders that have the expertise in their industry and in the technology. We're seeing mix of, crypto native and non-crypto native teams. That combination is powerful, because being all crypto native sometimes gives you blind spots around financial services. If you're doing a tokenized assets, back DeFi platform, and you've never done underwriting, tokenized assets for private credit, and you never underwrote a credit agreement or a credit, investment before, that's a problem. And I think that's why we saw a lot of issues in the markets, is that a lot of people don't really have finance experience. We love people who have finance experience and crypto experience or blockchain experience and can bring that together. We love companies that are really focused on the right unit economics. How is your business going to make money? I think there's a lot of innovations in making money when you bring in DeFi, right? That's the power of DeFi, right? You have companies now that are saying, hey, we'll offer you this for free, things that people would have to pay for. For example, if I'm thinking about, getting access to liquidity, usually I have to pay for that liquidity as a payment company. Now you're seeing situations where you don't have to pay for that. But how is the company going to make money if they're giving out liquidity for free? They're making money on the token, right? So the token has a clear utility, and the token can now actually create value and add to the bottom line. That's interesting. There's nothing wrong with having a token that actually has really strong utility value and can actually create more. The value of that token is correlated with the network effects created from that platform. You don't need to be using that token in careless ways. You don't need to use the token to secure assets and sort of leverage upon leverage, and start reinventing finance. Like, that becomes a problem. But when you're sort of creating a new business model to allow more consumers to get access to financial services and leveraging a token directly as it correlates to the value of your platform. That's interesting. So how do you create sustainable revenue models, sustainable unit economics? We look at that very closely when we look at Web3 projects.
Wow. It definitely sounds like you got to go through a lot of hoops, but a lot of hoops that are meant to be there and to be challenging for a reason. I'm sure you guys don't want to just invest in, like you said, any company that wants to slap blockchain on there or sustainable. You're like, I want the details. Tell me how you are going to be
Exactly. Or
sustainable.
say that they have a token or something. Yeah. And we're
Mm-hmm.
like, why do you have that token? Do you need that token? Or is
Yeah.
that token going to be a big distraction to this business and create a lot of problems down the line? Yeah.
Exactly. Like some of the key words that stood out to me when you were answering the question was sustainability, transparency, efficiency, decentralization, accessibility, and of course, inclusivity. So, I mean, just alone those six adjectives, like I think should be the standard in Web3, honestly. I think
Mhm.
that's what it stands for, is all of those things I just listed. So, yeah, I'm really happy that you're implementing these types of values in your company and trying to project that to all the other companies that you're also investing in. And another question about the topic, obviously, is how was the changing regulatory environment for blockchain and crypto? How has that impacted Unicorn Growth's capital investment strategies and decisions?
It's a great question because I think it's definitely affected my journey as in setting up this fund. And I think it's unwarranted, frankly, because I set up this fund purely to really be a positive force around the future of finance and getting more companies that are, investing in these companies that can really drive the next generation of financial infrastructure, that can really drive inclusive economies. And I think there are a lot of founders doing some really interesting things with this technology. But I think the noise around blockchain and crypto has really made it hard for a lot of funding to go into some of these companies. And in these markets in particular, blockchain and crypto can really change the game. We're talking about markets where are completely underserved financially. The legacy infrastructure isn't there. You know, Nigeria, this company I just mentioned is the first regulated blockchain switch in Nigeria. They're using the blockchain to do ATM transactions, to do fund transfers. That's not happening in the US. That's not happening in the UK, right? These countries are using technology in very innovative ways. And they're going to be using generative AI in very innovative ways, but for real impactful use cases that can really change things for people. Farmers getting access to AI so that they can better make decisions on their agriculture. Using AI for a lot of enterprise software to deal with a lot of the fragmented payment systems and the fact that a lot of supply chains are still driven by credit. How do you use AI to like sort of make things more transparent, make things more create analytics around that? How do you use Web3 and blockchain technology to create more opportunities for liquidity? I think the regulatory environment has seen a lot of the scams and the noise, and they don't focus on all the positive opportunities that can actually uplift economies. And so we spend a lot of time helping our founders connect with the right regulators and educate and show what they're doing in a positive way to these regulators so that it's clear that this is actually a positive thing for the environment and for the financial services ecosystem. But the funding environment has affected the regulatory environment has affected the funding environment, and the funding environment has affected the founders and has affected my ability to do more with my founders and make more investments. And it's unfortunate because I do think a lot of that noise from the regulatory environment is coming from a negative place when there's a lot more positivity. And the negative place is real. Like there were a lot of bad things that happened, corporate scandals, unsustainable business practices, but there is still a lot of important use cases, and funds like ours are really focused on that, and we need to see more of the funding. And also just lack of regulatory clarity is also affecting investors and their ability to pull the trigger on these investments. Institutional investors they, the ones that even get it and say, look, this is the future. I want a lot of things on chain. I want to invest in a fund that's on chain. I like the transparency. I like the efficiency. This is actually cheaper for us. Blockchain actually disrupts a lot of the old traditional practices. But these institutions are worried about even touching blockchain because there's no regulatory certainty in the US, for example, around it. So they just stay away from it completely. And what's happening is there are a lot of opportunities now in other markets. And so, in the UK, there's a lot more friendlier, regulations. Nigeria is trying to do stuff on the blockchain side, Middle East, Asia, Hong Kong, Singapore. And so there's a lot of opportunities outside the US now around getting more regulatory clarity, getting more access to much more friendly environments. And I think we're going to just see a lot of investors coming from those places that will be more keen to invest in these opportunities. It's just a redirection, but it definitely was unwarranted in the last year or so around the noise around blockchain.
Yeah, it makes me feel like we're kind of in the Wild West right now. I mean, at least the industry, it feels like that. And it's kind of like an arms race to who's going to do it the best. But it doesn't matter who does it first. It's always about who does it the best, right? Like, are you bringing quality over quantity? Are you actually thinking about the users, the end users, the consumers, everyone who's a part of this? Or are you just really thinking about making a quick buck? And like you said earlier in our interview, is that's not sustainable, and that can only get you so far. So I applaud you once again for being a positive force for future of finance. And I really can't wait to see what else Unicorn Growth Capital achieves. But I wanted to touch back on Africa, and because I feel that passion, like you want to really include all these other countries besides the UK and the US, right? So with Africa being the fastest growing fintech region in the world, can you tell me more about your insights, any key factors, and how you guys at UGC are capitalizing on this growth?
Yeah, like I said, one of the key value adds we bring to all our founders is to help them scale across Africa. So that is a key value add that we bring. And while we invest in founders in different locations, Africa is central to our theme. Why we're really excited about the market in terms of it being the fastest region is because it's almost kind of like in any investment opportunity, you want to be almost the first, because that's where you see a huge step change over time and you really get the benefits from a return perspective. And we're really going to be seeing that in Africa. I think for me as a fintech investor, I've been in the ecosystem before it really even started thriving. Back then, there was a lot more focus on consumers, and online e-commerce. But right now, I think people are seeing that the huge opportunity in fintech, the next wave of growth, and the blockchain is really key to this, is really on the B2B side and getting more businesses digitized and getting those businesses access to financial services. And those are businesses, those are enterprises, those are across all industries. And there's a huge opportunity there. And that's why the blockchain is so key, because businesses are constantly transacting and you need very efficient infrastructure for that. And businesses are global. And that's what people don't realize. Businesses in Africa are global. Businesses are constantly buying things across the world. They're exporting things. They need access to foreign exchange. They need access to finance. They're constantly, that's how the world goes around. And so the next growth of fintech is helping all these businesses and enterprises, digitizing them, getting all their transactions on chain, getting all their data, using AI to create a lot of analytics around them, making them more transparent, more efficient, and bringing them into the digital economy so that you can start actually, there's a clear correlation between the economy and the digital economy. And I think that is the future that financial infrastructure will create and the blockchain technology will create. That's where we're going to be seeing a lot of opportunities. We've invested in 9 companies, and most of them are helping enterprises and businesses. They have big enterprise partnerships, banking protocol partnerships, and they're leveraging this infrastructure across the ecosystem.
Yeah, and it does sound like when it comes to RWAs in the DeFi field, I had another question, but I feel like you kind of answered it earlier as well. Pretty much like, what do you think about the field? Obviously, you feel like it has a lot of value, and pretty much just replace, like, we don't want to reinvent the wheel, correct? We just kind of want to make it more efficient. And it's like, we don't need to start from scratch. Let's just build on top of that. And like you said, focus on the software engineering side of things and how can we make it more accessible and making the UI, the UX easier for the masses to kind of adopt this technology without freaking out. It is a lot. It's almost like AI back in the day. Like, we already knew it existed, but it's not really coming to light like it is now in today's society. So I
Wow.
think, like, us as humans, like, we fear the unknown. And so that's why I'm a huge proponent for being a part of a podcast like this and learning from experts in our industry, because education is key. The more knowledge you have, the more power. I mean, it sounds cheesy, but it's true, right? So I really appreciate you dropping so much knowledge, so many gems. And I like that you're a proponent for female founders as well. I'm going to go back to that because, and it's also a really awesome thing to actually let you know, like, it's our season ending episode. It's our 10th episode.
Yeah,
And I'm so happy that we finally got a female on here. Like, Andrew and
yeah.
the team can let you know, I've been trying to scope out any other women as well. But I mean, the scheduling has had its conflicts, but I'm really glad that we were able to get you on today, Barbara. And I know you're short on time, but do you have time just for one more question or a couple more?
No, absolutely. I'm.
Okay, for sure. I feel like you kind of did answer everything we had prepared, but I always like to end every episode just kind of opening it up to you. Like, I want you to let us know, are there any new, exciting, in progress projects that Unicorn Growth Capital is currently working on, and anything that you just want to share about yourself and the company. Open floor to you, and obviously plug in your socials where people can reach you who are listening and want to learn more about Unicorn Growth Capital.
Oh, sure. Thank you very much. A couple of things I'm happy to just end with and talk more about. I think one is we're a VC fund focusing on early stage companies. And just to quickly talk about the three areas that we focus on: open finance, embedded finance, and decentralized finance. I think when it comes to open finance, like I said, we really care about platforms that open up their APIs and create open infrastructure, using the blockchain infrastructure as well to really drive finance across all ecosystems and can be plugged into any ecosystem and also interoperable and can allow these economies and these ecosystems to be plugged into the global ecosystem, right? That's the power of open finance. So we're really bullish on that, and we love to see companies building infrastructure around that. Second is embedded finance, and I think we've talked about fintech and all of these concepts for a while, but I think what people are seeing, and I've always been a proponent of this for the last 7 years, 10 years, is that every sector basically for businesses and consumers, they need financial services, and I think the opportunities for founders building in any sector to leverage embedded finance to create the infrastructure that allow them to bring in financial services to that sector, whether it's a SaaS platform, marketplace, NFT powered platform. How do you make this technology leverage in a way that you can bring financial services? How do you get the data? How do you create analytics? How do you use that to sort of personalize your financial services products within that ecosystem that you've built? And then the last is decentralized finance, which we've just talked about. So you guys know my thesis around there. But I do think one of the key things there is that, we are really at the inflection point right now in really disrupting financial services. I mean, traditional finance companies, everyone is looking at this. And their founders, this is the time for founders right now to build some interesting companies and work with traditional finance players and bring them into the decentralized world, bring them on chain. So creating a lot of opportunities there. Right now yields are so high in the US for treasuries that there's so much opportunities to say, hey, how do we get access to that to those yields and bring them into our ecosystem so that anybody who holds any sort of currency, they can get yield. And they're not holding something just like that. They're like holding something that's returning value to them every day. This is a time to be really creative about decentralized finance and make it more circular. You know, make it. The whole point of all these economies is that it should really be circular. People save, that money goes into businesses and consumers that need access to financial services. they make money, they save, and then the money sort of goes around, right? How do we use blockchain technology to create these circular economies? That's really, really important. We're also fundraising for our fund, so we'd love to, talk to any investors that are interested in investing in our fund and also investing in our portfolio companies. We've invested in about 9 companies so far, everything from crypto-powered payments, blockchain payment infrastructure, companies sort of helping bring the masses into the blockchain world, helping merchants accept payments, through stable coins in the back end, to B2B SaaS plays, company building accounts receivable automation, managing a SaaS platform, managing loyalty rewards and customer relationship management across merchants, business management company, and a company that provides credit infrastructure for B2B marketplaces. There's a huge opportunity in providing credit. One of the key things that we're doing is helping a lot of our companies and companies that we plan to invest in who are building these DeFi protocols and using real world assets to use as collateral and to use for providing loans to businesses. We're working on helping these companies access liquidity to be used in their lending pools. Because there's not much institutional adoption, it's harder to get financing to put into these liquidity pools, into these DeFi platforms. And so we're working on that opportunity. So if there are any investors that are interested in getting access to, yields in the teens, for example, because these opportunities are de-risked, these opportunities are more efficient using smart contracts for risk management, for FX management, for compliance. You're accessing de-risked opportunities, getting higher yields in the teens, all using the blockchain, right? So we're trying to aggregate some capital from investors to be put into some of the liquidity pools of these DeFi real world asset lending platforms. So that's a huge opportunity right now that we're focused on and we're excited about.
Ooh, that was a long laundry list, but I love it. Like you said, there's a plethora of opportunity that people can choose and pick and be a part of, and everyone heard it here first. So Barbara and her team at Unicorn Growth Capital are definitely looking to help fund anyone in the space who wants to join your 3 core values. It sounds like, correct? Your everything being about open finance, better finance, and decentralized finance. So mic drop. I can't wait for this episode to come out, to be honest. I'm so excited to share it with everybody. And yeah, thank you so much, Barbara. I feel like you and the team are going to accomplish so much more than you've already stated in the last like 30 minutes that we've been talking. I really love speaking with other passionate people, especially in this space. And thank you again for sharing your insights and just educating the rest of the masses who are curious or who are professionals in the industry. I think your words carry a lot of weight. And once again, so much respect for you. And I honestly cannot wait to see what else y'all accomplish.
Thank you very much, Nikki. Really
Yeah,
appreciate it. Really,
for
really appreciate
sure.
it.
With this, we come to the end of the episode. To our audience, thank you for listening. If you enjoyed what we are discussing about the RWA and DeFi world, please don't forget to subscribe to Link to the Chain and share it with others. To catch all the latest from us, you can follow our Instagram and Twitter at Link to the Chain. Looking forward to sharing with you guys the next episode. Stay tuned.
Ladies and gentlemen, we've reached the end of an incredible journey, the conclusion to our first season. As we wrap up this episode, we want to take a moment to express our deepest gratitude to you, our incredible audience. Your unwavering support and enthusiasm have been the driving force behind this podcast success. We also want to extend a heartfelt thank you to our extraordinary guests who have graced our show throughout the season. Your valuable insights, expertise, and captivating stories have enriched our podcast and inspired our listeners. It has been an absolute privilege to have you join us on this adventure. To our listeners, we appreciate your continued engagement, feedback, and loyalty. Each episode has been an opportunity to connect, learn, and grow together. As we conclude this season, we're already buzzing with excitement for what's to come. We'll be taking this time to recharge, reflect, and prepare for an even more remarkable next season. Stay tuned for updates on our upcoming episodes, guest lineup, and thrilling new content. Until we meet again, we want to wish you all the best. Take this time to explore our previous episodes, share them with friends, and let us know your favorite moments. Remember, the conversations we've had are just the beginning, and there's so much more to discover past the surface. From the bottom of our hearts at Vsauce, thank you for joining us on this incredible podcasting journey. Your support means the world. So stay curious, stay engaged, and we'll be back before you know it. Goodbye for now, and see you next season.